Good morning, everybody. It's Chris from Serene Education with the 4 Major Zones update for the 2nd of December 2013. Hi guys, hope you had a fantastic weekend with family and friends. Let's have a look at the 4 majors this morning, starting with Euro against US dollar on our daily, looking at the indicator box here. And let's see how we finished off last week and what we have in store for this week. So I made a note last week that we wanted to see, well, I needed to see a daily close above the 23.6 fib, and you can see last night's trading session we had Friday closing higher, and then last night on the Asian session, the open, we had very little movement at all, and subsequently ending up actually trading right on that fib level. However, this morning on the Asian session we've seen the euro really moving higher and testing now the current daily highs intraday. So if we just zoom in here so I could show you that, you can see last week's highs, in fact Friday, Thursday, Wednesday highs. That's where price needs to be breaching above. So now it's maintaining, it's broken out over the past couple of days, and now we've had a pullback, and now as long as price actually maintains above the 23.6, then we should be looking for upside for the remainder of this week, in fact. However, just be well aware that we're going into the first week of a new month, being December, and we have therefore the non-farm payroll out this coming Friday. So got to be well aware of that. So as long as momentum still maintains to the upside and stays above the weekly fib, then we should be targeting our monthly fib here at the 61.8, which is our prior highs that we saw back in October of this year. And to give you an idea, we're looking in excess of 218 odd pips. So everything's looking good at the moment now. The indicator box is very much telling us we should be looking for upside. So therefore, look to see price breaking higher highs intraday. So if I drop down to my 4-hour time frame, you can see now that the weekly fib is below. Okay, you can see a lot of hesitation in and around this area. We saw the institution also being a major resistance level. Then around the latter part of November, we saw price testing both the weekly fib as well as the institution moving average, and subsequently since then we've seen price managing to break above that, and now it needs to now break the current high level, and then we can see new highs being made. And if price is making new highs, swinging higher, then we are very much in an uptrend. So look to see a break of the current resistance level high, which you saw Wednesday, Thursday, Friday of last week, get above that, and then we can start looking at targeting our monthly fib to the upside, which is a healthy 200, just over 200 pips in fact, to that level. On to sterling. Here again we had a nice positive breakout of that consolidate the resistance level just recently, and you should have been targeting your monthly fib at the 38.2, which is clearly what's happened since then. So in excess of roughly 150 odd pips to that level have been made over the past couple of days as we've headed into that level for sterling. You can see the indicator box very much telling us to the upside. However, you can quite clearly see that the price is testing the 38.2 on the monthly level now. So we've got to be well aware that we could see consolidation. There we go. If I just drop down on the 4-hour time frame, we get a nice juicy buy. You can see price, the last 4-hour candle has just closed above that monthly fib. So ideally now I like to see an hourly close above the 4-hour close, and that will then allow me then to start looking at other targets, potential targets, and there's one above me, roughly around 278 pips. So got to use that as an observation. Just going to look and see if there's any news out this morning for sterling. We have manufacturing PMI results at 9:30 GMT this morning, so something there to be well aware of. They're expecting a slight expansion, which is great. From the previous figure of 56.0, they're expecting 56.5, so they're expecting a 0.5% increase. So got to see if that comes out, but as long as price now stays above this monthly fib here, the 38.2, then we should be looking for price to make swing highs. However, if she closes low again on a daily, etc., look for further consolidation with potentially a change in market sentiment. But we want to look at candlestick patterns around this area here. Price is trading into that level right now on the daily, so you either got to ask yourself one or two things. Rather give them the candle back to the market today to give you a clear directional candle and then trade the outcome of that, or be quite aggressive and trade intraday and then look to profit from that before moving on for the remainder of the week. Sterling against US dollar, US dollar Swiss franc, apologies. If euro is moving higher, then you expect to see the US dollar Swiss franc doing the opposite, and you can quite clearly see we have a correlation there between the two. Price will be making lower lows. In fact, on the daily you can quite clearly see a major fall over the past couple of months. In fact, below the institution you can see my RMO, my institution moving average indicator here, very much telling I should be looking for negativity. On the chart near term, you can see we have been quite consolidative In fact, we ended off the week with a bit of indecision. However, everything was still pointing to the downside. So if price is still making swing lows, then we should be looking for further negativity. And you can see the red, we've got red arrow, red candles, RMOs below, RSI indicator below, RSI below. So pretty much look for negativity on this particular pair. And trading well below the institution moving average, well below the 50% fib retracement on my weekly, and well below the 23.6 on my monthly fib. So definitely clear resistance above. So we should be seeing price falling. And you can see now, if I take the current low that we saw in mid-October to the current high that we saw through the early parts of November, you can see that price has been consolidated at least on the 50% retracement on our daily time frame here. So a lot of negativity at the underside now. Before we had 1, 2, 3, 4, 5, almost 6 consecutive days of support at that level. You can see the past 3 days, in fact, we're seeing price trading below that level. So intraday, if you really want to do be well aware of where price is going to, you can see prior before the institution on the 4 hour was very much support. Now she's trading below. That's a negative sign again. So swing lows also depicting downside. So here we should be looking for negativity. Okay, we should be looking for clear breakouts to the downside for further opportunities to the downside. If price, however, gets back above the institution, then your mindset will change from one of negative to intraday positiveness, and then look to target the current swing lows as potential near-term targets. US dollar, Japanese yen, yeah, very positive. You can see the daily after breaking out that wedge pattern that we were clearly in for such a long period of time. You can see over here, right up until the breakout here, the latter part of October going into November. In fact, we had a nice breakout recently in November, and subsequently moving above the monthly fib, which is what our first target, what I wanted particularly to see happen. And then what I've done is I've actually traded the outcome up here. So very, very strong breakout, and you can see the continuation to the upside, swing high, swing high, swing high, and just moving higher. And the next particular one will be back up to our prior resistance level highs in April, which is at 103.68. And you're looking where price trading right now to that level, still a healthy 124 pips. Price has been quite consolidative recently over the past, you can see Friday and Thursday, very, very hesitant. Yes, price is moving higher, but very indecisive, and you can see the OSMO has actually dropped over the past couple of days. RSI is showing me, or indicating to me, that it's well overbought now, and we could see a consolidation of some sort. So if you are looking to trade this back up towards this weekly high, we would need to see a bullish engulfing candle. We do not trade indecision candles, which is what we have seen over the past 4 or 5 days. Drop down to our 4 hour time frame. Let me just zoom out here so you can see more price action. There we go. You can quite clearly see that price has been very, very consolidative on this time frame. So moving higher, taking it away, moving higher, taking it away, and this leads to a lot of indecision candles, a lot of spinning tops and dojis. We don't want to trade those. We want to trade bullish engulfing or bearish engulfing candles if possible. So here, if we are to see any further upside, which is what the indicator box is telling us to do, then we need to see a nice bullish engulfing 4 hour candle, something with a bit of genuine sentiment movement, and then we could trade the outcome to at least the current highs here, just short of the 103.96 mark, and see if we do get a bearish engulfing candle and this slowdown has very much taken hold, then we could look to the prior breakout support and resistance levels, which were down here, in fact, at 101.24, and changes our first target. And that's not a bad outcome. You're looking at roughly around about just short of 100 pips, so fair trade to the downside if she does roll over. And if she does roll over, we want to see a bearish engulfing candle actually taking out this consolidation that we've seen over the past 4 or 5 days. That's it, guys. Short and sweet, to the point. Please be aware we are going into the first week of the new month, so therefore we should be well aware that we could see, well, we will see non-farm payroll results on the US market on Friday. The day prior to that, we have interest rates announcements for both the European market as well as the sterling market. So those 2 particular days, Thursday and Friday, is pretty much a very, very news oriented day. So there'll be a lot of speculation and a lot of volatility. So if you are new to trading, I advise you just stand aside and just watch and see how price actually moves with news outcomes for those 2 particular days. It'll give you a heads up of how price is so volatile surrounding those 2 days in particular. So other than that, today we had Australian figures out this morning. Positive figures for the Australian market. We had building approval month-to-month figures, which came out a lot stronger than the previous figure. We also had company operating profits quarter-on-quarter figures, which was way up, almost a 2.8% rise. But the big one was the Chinese financial manufacturing PMI results. They were expecting expansion of 0.1% for that, and it came out almost 0.4% better. So I think even though we did have favorable news for the Australian market, a lot of the other Asian pairs did move with that outcome, because that's showing that we are starting to show a bit of growth in the Chinese manufacturing side. And if they are manufacturing, we all know they are the big boys in the block, and if they are showing a really positive figure there, then there's obviously people starting to start buying again. That whole mechanism starting to work, that whole manufacturing side is starting to work, and that China has been the big key player in the global market the past couple of years, as we all know. Other than that, we have Spanish manufacturing PMI results for the Euro section. We also have Italian manufacturing PMI results, important for Italy. They have been going through a lot of negative side. It'll be good to see if they actually show growth here. They are expecting a 0.5% difference there. Sorry, they are expecting almost a, what are we looking at here? Almost a 0.8% change. And this afternoon we also have Fed Chairman Bernanke speaking, which is also a big news announcement. When he tends to talk, everybody tends to listen, and they also tend to speculate. So you see a lot of volatility. So if you are trading any US crosses this afternoon, please be very, very vigilant on your stops, placements, etc. Because Bernanke will be having a chat this afternoon at roughly 1:30 GMT. 3 o'clock this afternoon, we also have the ISM manufacturing PMI results for the US market as well. They're expecting a slight contraction there, however. So if that does come out, if Bernanke says something that's negative and manufacturing also complements that, then we could see a real fall for the US market. If not, we see Bernanke come out with positive news and the manufacturing coming out totally different. You'll probably find that Bernanke's speech will probably be more important, but we could see a lot of up and down as we get both sets of news coming out. So it's very, very important that if you are trading the US dollar across this afternoon, please be vigilant where your stop placements are, and if you are looking to trade it, please stand aside and just wait for the outcome of the news announcements before actually going ahead and trading that particular currency. Other than that, please, if you are using this particular template, use proper money management techniques, and also, most importantly, to actually understand the rules of the particular the trading template. Very, very important. Understand it, and then just apply correct money management, and you are on a winner. If you are interested in actually getting your hands on this particular template, please email us. There will be an email address at the end of this video. Drop us an email and we'll get back to you as soon as possible. Other than that, keep it as simple as possible, guys. As you all very well know, trading is hard enough. We don't want to actually complicate it anymore, and that's the beauty of actually having a template similar to what we are using. It's very, very mechanical in its approach, and allows you then to make decisive decisions, and decisions that are going to be very profitable for you going out into the long term. Other than that, have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.